So you are thinking of buying a property for the first time here in America? Well, today in this video, we're gonna go over 11 tips you should know when purchasing a property for the first time. We want you to be prepared and know exactly what you're getting into. Buying a property is not an easy process. It takes a lot of effort from the bank that you're gonna work with, from the realtor that you're gonna hire to help you purchase a property and help you negotiate, and for you and your family, because you're gonna jump in the car and go see properties all day long until you choose the right one for you and your family. In today's videos, we're gonna go over taxes, income, credit scores, types of loans available on the market, and also the entire buying process, what that means for you as a first-time home buyer. So you need to know this so you can actually start the process for you and your family. So that's exactly what we're gonna be covering in this video today, and we are getting after it right now. This is Livia Bica with Keller Williams, North Atlanta. Now let's go into 11 tips you should know for first-time home buyers. Step 1, know your finances. Now here, you need to connect with a local lender, or if not, go and talk to a realtor that can give you a few options for the lenders. Usually realtors have at least 2 or 3 mortgage brokers that they're gonna work with, and they recommend one of the best on the market or in your market. Now, when you talk to a lender, what you need. For first-time home buyers, you need a down payment, usually 0% down to 20% down, depending on the loan that you're gonna be qualified for. Sometimes you can have a 0 down payment for a VA loan. You need to have closing costs, budget for at least 2 to 4% of the home price for your closing costs. So let's say if a home is $400,000, you need to have at least 3 or 4% for closing costs. So $12,000 or $16,000 for closing costs. Now depends, some lenders have better closing costs and cheaper closing costs than other lenders. Make sure you talk to your bank and know exactly what the closing costs are gonna be. Then you have to consider property taxes. Property taxes are sometimes, 1% of the purchase amount, sometimes they can be a little bit higher. Look at the counties that you are in. For example, here in Atlanta, we have Fulton County, Forsyth County, and Gwinnett County. Now, if you buy a property in Gwinnett at $500,000, you usually pay $5,300 yearly taxes. If you buy the same property in Forsyth County, $500,000 property in Forsyth in Cumming, for example, your taxes will be probably $4,000, so much cheaper than Gwinnett. Now, in whatever city you are, I'm sure you're gonna have 2 or 3 different counties. Make sure you know exactly which county is cheaper and which county is better for you and your family. Talk to your realtor again. Then you have, in this step also, you need to have your income. So we are talking, lenders usually are looking 2-year consistent income. That means if you want to buy a property in 2024, your bank is going to look at your taxes, your income for 2023, 2022. So make sure you have that in your hand, and make sure you have a 2-year consistent income. If you make $50,000 in 2022, you should have $50,000 or higher income in 2023, not lower. Usually, if you have a gap between the incomes, let's say you have $50,000 in 22, $60,000 in 2023, the lender is gonna have a median income yearly. So 50 plus 60, it's 110 divided by the 2 years. You usually are gonna have $55,000 yearly income. If one of the years is lower, they're gonna do the same thing. Then credit score. Credit score is one of the most important factor in purchasing a home anywhere you are in America. The higher the credit score, the better rate you're gonna have and the lower down payment you're gonna have. Now, the lower the credit score, if your credit score is 600 or 580, you're gonna have a higher interest rate usually, and you're gonna have to pay private mortgage insurance, and you're gonna have a higher down payment, sometimes 3.5, sometimes 10% of the loan amount. Now let's go to number 2, step 2, which is types of loans available in the market today. Number 1 is the FHA loan. So this is for people that have 500 to 579 credit scores, usually FHA loan with a 10% down payment. So make sure you have 10% down payment if your credit score is this low, up to 579. Now, if your credit score is going to be a little higher, let's say 580 and higher, instead of a 10% down payment, an FHA loan would let you purchase, will give you a mortgage for a 3.5 down payment, which is much better than a 10%, yeah? Then, of course, for a FHA, you're gonna have PMI, which is monthly insurance payment. Now, this is for all the FHA. Sometimes they are for the duration of the loan. If it's a 30-year loan, sometimes you will have to pay that for 30 years. Sometimes, usually the lender is required to take off the PMI when you're gonna reach 78% of equity, which takes a long time. Now you're gonna have also then number 2, conventional loan. Conventional loans in America are usually a 3% down payment. So if you're buying a property at $400,000, you just need $12,000 to purchase this house, plus everything that we're talking to step 1. Now, credit score for a conventional loan is 620 or higher. Of course, if your credit score is a little bit higher, let's say it's 700, you can probably get a better rate for a conventional loan where you have no PMI. Another type of loan is USDA loan mortgage to low-income residents of rural areas who cannot otherwise obtain a conventional loan. If you live in a rural area, you can apply for a USDA loan. These loans usually have 0 down payment. They require a credit score of 640 or higher. Okay, another type of loan in America is VA loans, which offer loan programs to help service members, veterans, and their families buy homes. VA loans are usually 0 down payment, no PMI. They require a credit score of 620 or higher to qualify. Now you saw we have 4 types of loans, so make sure you talk to your bank, to your local lender, and see exactly for which loan they're gonna qualify you for. There are a lot of loans available, so I'm sure you can get one. Just make sure you do your research, and you can actually shop around with 2 or 3 lenders and see which one can get you the best interest rate, the lowest closing cost. That's another thing that you have to do. Okay, step 3, hire a full-time realtor in your area. It doesn't matter in which city you are. We recommend have a professional realtor by your side that know exactly how to handle everything, and they can help you explain the entire process. And a good realtor can actually help you understand the area, the homes that are available, and they can guide you to the entire process and help you negotiate the contract. Now, a good realtor that knows the area can also give you a few lenders that they actually work with in past deals. I do have 3 or 4 banks that I usually work with constantly, so I know I can trust these mortgage brokers. I always recommend them to my clients. It doesn't matter if they move from out of state or if they are local buyers. I usually send them at least 2 lenders that I work with personally and that I know I can trust. This is a very, very important step. So talk to your realtor and see if they work with a local bank that can actually give you a better deal. Now, also your realtor can set you up on a campaign, on a search, and they can, send you listings, active listings in your market every day. They can actually take you for private showings instead of just going to open houses by yourself. Do not do that. Just, make sure you select a realtor and make sure you tell them your wants and needs for a property. For example, how many bedrooms do you need? What's the minimum square footage that you need? Backyard or no backyard? Basement or no basement? What's the school district that you want to be in? If, for example, right here in Atlanta, if somebody is gonna call me and says, Livia, I want to be in North Gwinnett High School, then In my local FMLS, I'm going to create a search for my client that wants to be only in North Gwinnett High School, and I'm going to send him all the available listings in North Gwinnett that are going to match their criteria. That's why it's so important to have a realtor by your side. This is going to help you so much. Usually, buyer's agents are paid by the seller agent from the commission that the seller is paying, so you don't have to worry about that. But in some instances, if you find a property that the seller is not paying commission, then you will have to pay the commission, the buyer commission, to your agent, usually 2 or 3% of the purchase price. Number 4 is pre-qualification or pre-approval letter. These are two different things, and they mean completely different things. So pre-qualification is just you going online. Let's say you are applying online for a mortgage. You are telling the computer, I am making $69,000 yearly. My car is $300. Automatically in 30 seconds, the computer is going to give you a letter and say, hey, this company approved you for $400,000, but we still need to get your paperwork. This is just a pre-qualification. Nobody checked your income, nobody checked your assets, nobody checked anything. So this is not an actual pre-approval letter from the bank. Now, usually when you send an offer, when I'm working with a client and I'm sending an offer, I always require them to send me the pre-approval letter from the bank that they work with, not the pre-qualification letter. Because if the pre-qualification says you are gonna get $400,000, when you go to the pre-approval, when you actually send all the documents to the bank, the W-2s, pay stubs, you have to send 2 years of tax returns, 2 months of pay stubs, 2 years of W-2 or 1099. You also have to send 2 most recent bank statements. Then is when actually the bank is gonna pass you to the underwriter and is gonna actually tell you exactly how much they can borrow for you. So make sure you have the pre-approval, not the pre-qualification letter. Pre-approval, and maybe talk to your bank if they can pass you through the underwriter, which means you practically send all the paperwork to the bank, everything that they ask for. You actually have it's almost like you have the money, the cash in your hand. You already passed the pre-approval, you already passed the underwriter. So that means you can buy whatever property you want in that price range. This is what I do with my clients here in Atlanta, because I have these 2 banks that I'm working closely with. One of them is actually Movement Mortgage, and I know the mortgage officer very well. He's actually a friend of mine. So I always send him these clients and I say, can you make sure they get the pre-approval and they pass the underwriter, because they want to buy a property fast, and we want to make sure the moment we send an offer to a listing agent, they know that's a strong offer. Once you pass the underwriter, the listing agent knows it's almost like you have the cash in your hand, which is amazing. Now, in the pre-approval process here, you can apply with different lenders. You have 45 days. This is not going to affect your credit score too much, just a few points. So make sure you call at least 2 or 3 different lenders, 2 or 3 different banks, and you shop around for the best interest rate and for the best closing cost that each lender is going to offer you, and for the best program available for you, depending on your income and depending on your credit score, of course. Okay, so let's go to number 5, which is cost of buying a property. Now, anywhere you are in America, make sure you are in a good area, in a very strong market. Now, what that means, so in cost of buying a property, we have 2 things that we need to consider. Opportunity cost. Let's talk about that first. So opportunity cost is price will grow every year of the property that you're going to purchase if you are in a good market. To give you an example, here in Atlanta, in 2016, the median sale price of a property in Atlanta was at $245,000. After 7 years, in 2023, the median sale price of a property was at $430,000. So it's a growing market here in Atlanta. It's a still very hot market. So somebody that bought this property at $245,000 in 2016, right now in 2023, 2024, they can sell it for $430,000. Now, if they did some upgrades, I'm sure they can sell it at $490,000. So it practically doubled in price in 7 years. Now think about that. If you would have paid, rent for 7 years, you can get nothing back. You are just paying rent to live in the property. But if you bought this property in 2016, you can actually have a lot of equity and sell it and have $200,000 over in 7 years. You can make $200,000. Now, always when you purchase a property, make sure you are in a good area. Make sure the market that you are in, prices are going up. Make sure you are in a very good school district so you can actually sell the property much faster and a much higher price, especially if you do some upgrades as well. Now let's go to unrecoverable costs when purchasing a property. Now you have property taxes, usually 1% of the loan amount or of the home price. If you're buying at $500,000, usually $5,000 are your taxes that you're gonna pay yearly for the schools and for everything that the county is taking the taxes. This is unrecoverable. Then you have maintenance costs, which is again, make sure you have 1 to 2%, from your sale price, into your account, cash for maintenance, for easy things to repair in the home, because things can break. Then you have mortgage interest costs, which what's amazing about mortgage interest costs, you can actually deduct the entire interest to your taxes. When you do your taxes, the bank is gonna send you every year, like at the end of the year, is gonna send you a detailed form where it's gonna tell you, Livia, this year, 2023, you paid $10,000 in interest to this bank. Now that $10,000, when I do my tax, I will declare that into my taxes. So this is something that you actually do recover, but you are still paying that money because you got a loan. Then you have HOA annual fees. Now HOAs are homeowner association fees. If you are buying an apartment in a big building, if you are buying a property that is in a big subdivision, usually, especially here in Atlanta, we have a lot of big subdivisions that have pools, tennis courts. So every homeowner will have to pay HOA fees to be able to enjoy those amenities. This is, usually from $200 up to $5,000 yearly. Depends exactly where this property is located and what kind of amenities you have at your subdivision. Then you have homeowners insurance, usually required by the lender. The moment you're gonna be under contract, your lender is gonna tell you to get a homeowner's insurance. Now this can be from $500 yearly up to $2,000 yearly. This will protect your home in case of a fire, thunderstorm, or earthquake or something like that, So you need to have that because it's required by the lender. Now, another cost associated with when you purchase a home is the home warranty insurance. This is something else. It covers the electric, ACs, HVACs, anything in the home, inside the home. What we do here in Atlanta, I encourage my clients to get a home warranty insurance, which is usually from $300 up to $700 yearly. That will cover at least the AC and the HVACs and or the appliances. I see clients actually sending, getting quotes and sending to the insurance company, hey, my refrigerator is broken, come and fix it. Hey, my AC is broken, come and fix it. We actually had a situation where I listed this property and they had no home warranty insurance, but because we are in such an amazing company, we are with Keller Williams, North Atlanta, we do have a lot of vendors. So always for a listing, I always provide my clients, my sellers, with a home warranty insurance during the listing period. Now, what happened in this listing, after a month being on the market, the home needed a few repairs, but anyway, we sold it. But after 1 month, one of the AC broke. It stopped working. So because the seller had a home warranty in place, what we did, we filed a claim, and the 210 home warranty, which is here in Atlanta, and I'm sure it's everywhere in America, came and replaced the entire AC unit. So this was actually to no cost to my seller, but if you will be a buyer and you have a 210 home warranty, this can actually save you a lot of money, especially if you know your AC units, HVAC, appliances, electric, plumbing, anything is a little bit older in the home. We do recommend buyer or seller to have the home warranty in place for the property that you bought or you are selling, because it's gonna help you a lot in the years to come. Then you need also the unrecoverable cost of inspection. So you as a buyer, at least here in Atlanta, I'm not sure anywhere in America, but here in Atlanta, the buyer has to pay for the inspection. Now, an inspection can be from $200 up to $1,000, depends how big the property is, depends exactly how many square footage they have to, inspect, if there is a basement or no basement, if there is a finished basement. But anyway, $200 up to $1,000 for the inspection. You as a buyer, you will have to pay for that when you are purchasing the property. When you are purchasing the property. Now, another cost will be the appraisal fee. Usually here in Atlanta, all the deals that I had, usually the banks will require the buyer to pay for the appraisal. The bank is not paying for your appraisal. So the moment we are on the contract, of course, the bank is gonna send you a bill and they're gonna say, here is the inspection, the appraisal date, make sure you pay the $500 or $600 fee, so the bank can actually send an appraisal to the property and see exactly if the property is gonna appraise at the purchase price that is on the contract. Then you also have earnest money, the down payment of earnest money. The moment we actually gonna send an offer, me as your realtor, I'm gonna ask you, how much do you love this property? Let's say it's a $500,000 home here in Beaufort or anywhere in Atlanta. If it's a hot market, and it is a hot market here in Atlanta, what we do here, we actually recommend to our buyers, have at least 1 to 2% of the loan amount in earnest money in your bank. And this needs to be cash coming from your bank. You cannot borrow that, you cannot get it from a credit card, nothing like that. So let's say it's a $500,000 home. If you really love this home a lot and you know it's the perfect home for you and your family, that we're gonna actually discuss that, before sending an offer, we actually recommend to have $5,000 to $10,000 cash in your bank, so we can send them to the listing agent and to the company that the listing agent is working, or to the attorney's office. These are called earnest money. So what happens, let's say we are sending $10,000 earnest money when we're actually gonna send an offer. If we stay in the contract and you love that property, at the closing table, the attorney's office is gonna deduct the $10,000 that you already put down from your closing cost or from everything that you bring to the closing table. So it's not money that you're losing, but it's money that you actually have to have in the account cash, so we can actually send an offer. Now let's go to number 6. Start the home buying process, which is the most important and the most exciting. So your realtor is gonna set up a search in your local FMLS, and based on your criteria, they're gonna send you active listings every single day. Now you as a buyer, what you need to do is look at all the properties that your agent is sending you, save as favorites the ones that you actually gonna see in person, the ones that you think are a good match for you and your family. Let's say you are saving 10 properties from the 100 listing that your agent is sending you. Now the amazing part is you have to jump in the car. Your agent is gonna schedule private showings for all these 10 properties that you saved, and together with your agent, you're gonna go and actually see the 10 properties. Now, some people do need maybe to see 20 homes or 30 homes. Some people that know exactly what they want. Usually when they see 10 properties, they usually select at least one that they love. Now, if you are in a very good market and prices are going up, there are also a lot of buyers looking, then is when you have to send a very strong offer. Then it's when your realtor is going to tell you exactly how the offer has to look, how much earnest money we have to send, how much due diligence period we have to have, where in the due diligence you're going to do an inspection and start negotiating. Number 7, send an offer. Now your realtor is gonna look at 3 comparable homes in the neighborhood that you are choosing or in the area that you are choosing. It's gonna look to see these 3 properties that are comparable with the property that you wanna send an offer. How much they sold for, how many days they were on the market, what's the price that they sold for, and exactly how much earnest money you can put down, how much due diligence period will you have to get this property for you and your family. If you're in a high market as Atlanta, if it's a a property that looks very good and it has the correct price, we usually recommend 3 to 7 days due diligence, which means in those 3 to 7 days, you as a buyer are gonna hire an inspection company that your realtor is gonna help you select. I usually have 2 or 3 companies that I work with, so my buyers don't have to worry about looking for an inspection company. I always send them here, these 2 companies I'm working with, let's schedule an inspection. Now, the moment you pay for the inspection, let's say it's $300 or $100 or $400, the inspection company is gonna go out and is gonna look at the property inside, outside. They're gonna check all the appliances, the AC, the HV, the roof, any leaks, any rotted wood. They're gonna look at the driveway, everything that you can think of, like when you are actually, going to a property, and to see if anything is bad with the property. Now, it's very important to have a good inspection company on your side, because usually after 3 hours sitting at that property, a good inspection company will send you a 30 to 70 page report about everything that is inside the house, outside the house. If the house is positioned in a flooding area, did it have any water stains? Did it have any issues with the AC or the HVAC? They're gonna look at everything. Now, once you get that inspection report, then is when you're gonna actually talk to your agent and you're gonna go over everything. Now, let's go to number 8, which is the inspection and negotiating the contract due diligence period. What that means. So you send an offer to this amazing property that you and your family love. Right now, you are in the inspection period, the due diligence period. Due diligence means you select 3 days, 5 days, or 7 days, or sometimes 10 days as due diligence, which means in these 7 days, 7 business days, you have the right to make an inspection, inside, outside. You can also have the right to do a mold inspection, termite inspection, anything that you can think of. But you as a buyer are going to pay for those inspections, not your lender. So once you have the inspection report, this is when your realtor is gonna come in, you're gonna look over the entire inspection report, see if everything is wrong with the property. In the due diligence period, let's say you find something bad in the inspection, and you are gonna tell your realtor, hey, this house is amazing inside, but I don't know, maybe the roof is very old, it needs to be changed, HVAC is 20 years old, barely working. I wanna get out of the contract. In those 7 days, you can get out of the contract for any reason. It doesn't have to be the inspection, it doesn't have to be repairs, it doesn't have to be anything. Maybe you found a better property at a better price. The moment you want to get out, you just tell your realtor, hey, send a unilateral letter to the seller and let them know we are getting out of the contract because this home, for example, it has too many issues, or we found a better home that doesn't have any issues, it's brand new, maybe it's a new construction, you don't have to fix anything. So the due diligence is so important when you are negotiating a home, because your realtor can guide you to the entire process. So make sure you have a good realtor that knows the area and has deals that can negotiate for you. Now here, what we do in Atlanta, instead of asking for repairs, we will ask for repairs only if they're needed. But let's say we find something, we had issues, we had a home actually at $800,000 in a very nice golf club community, beautiful property. But my clients were from Wisconsin and they told me, Livia, based on the inspection report, we saw this, and this. We don't want the seller to fix any of those issues. We want actually the seller to give us credit that we can use at the closing table. So what we did, we asked for $25,000 credit because it was a big home, We found a lot of issues, and they said, just ask for $25,000, see if they can give it to us. We prefer, because they had a conventional loan, we prefer to get those $25,000 and fix it ourselves the moment we move in the property. That's what we did. The seller agreed, we sent them the inspection report, and they saw that based on the inspection, actually we need the $25,000. So that's a way to negotiate. We're gonna have some more videos on that, but anyway, due diligence, most important. When you do the inspection, you know exactly how many days you're gonna be in the contract, and you're gonna know exactly if you're staying in the contract or you're gonna get out of the contract. Now, let's say you get out of the contract because the seller doesn't want to contribute anything, then is when you're going to lose the inspection money, because you already pay maybe $500 to inspect this property. Then you're going to go find another property where you have to do another inspection. But this is just in some cases. Some buyers actually do that, like 2 or 3 properties that they're gonna inspect, that maybe they really love them, but the moment we try to negotiate, seller didn't wanna do anything. Of course, we got out of the contract. So you have that option. Make sure you talk to a realtor. Now let's go to step number 9, appraisal. This is what the bank does. Again, you as a buyer, you're gonna have to pay for the appraisal. Now, if you have an FHA loan, usually appraisal for an FHA loan, they have more restriction. What that means is, if you're getting an FHA, the house needs to be in very good condition, very good livable condition. The AC has to be on, the heat has to be on, water has to be on, the lights, electric cables need to be covered, outlets they need to be covered and working properly. If they find, the moment they do an appraisal for an FHA loan, and we had situations like that here in Atlanta, so the bank is going to send the appraisal. They're going to do an appraisal to see exactly if the home is worth it, $500,000. Then they're going to also do a small inspection right there when they do the appraisal, because they want to make sure the house is in working condition, ready to move in. That's why FHA is a little bit more restricted than conventional loans. Now, we had a situation where the FHA went to the home, they inspected everything, they came back to us and said, well, you know, a few outlets in the basement, they had some cables coming out. This is very dangerous for the people that are gonna move in. We want the seller to fix this and these issues. So of course we send the letter to the listing agent, and of course we had that fixed. Seller will fix everything that the FHA usually is requiring. And now you do have to put it in the contract, so make sure you have a good realtor on your side to put that on the contract, that the seller is responsible for the FHA repairs. Now for conventional, it's much easier. Usually they're not gonna do that. Usually they just do an appraisal to make sure everything is fine. Only if they can find mold or something very bad, you know, like termite or something, then they're gonna require the seller to fix it. I had a lot of conventional loans and they were all super easy, so it's much easier for a conventional loan than an FHA loan when they do the appraisal or the inspection. So the appraisal is just for the bank to be protected. Practically, they are sending an appraisal to see if this property is worth $500,000. Now, what the bank will do, let's say the appraisal comes back at $475,000, but your contract price is at $500,000. The lender, the bank, will only borrow you $475,000 if the appraisal came back lower. We had situations like that here in Atlanta. But anyway, if you agree as a buyer to pay the difference, $25,000 in cash, then the deal can take place. Now, you're gonna talk to your realtor, because you can still negotiate. Even though if the appraisal came back at $475,000, you can ask your realtor to ask the seller to lower the price at $475,000 because the appraisal came at $475,000. Now, in some situations, the seller will not agree to lower the price. What that means, you have to bring the $25,000 from home, or you can probably get out of the contract if you put it in the contract. If the appraisal comes lower, the buyer has to right to get out of the contract. Now, we had a situation where we had buyers, they loved the property so much, they had the cash, they wanted to bring the cash from home because they really wanted this property. But this is a special market in Atlanta and North Atlanta because this area is so beautiful. We had many situations where the buyers actually bring money from home to pay the gap between the appraised value of the property and contract price. We also had a situation where the seller saw that the appraisal is lower, and the seller was able and agree on lowering the price to have the deal go through. So there are ways to negotiate. Now, make sure you talk to your agent so you know exactly what to do in that situation. Now, number 10, the final walkthrough of the property. What this means. So let's say you've been through all these steps, you are staying in the contract, the property is beautiful, you and your family, you love it. Now, the night before the closing, let's say the closing is on a Wednesday at 12 p.m., either the day before or the morning before the closing, I take my clients, the buyers, and we go to do a final walkthrough of the property to see if the seller actually cleaned the property, left it in the proper condition, to see if the AC is on, the AC, everything, AC, heat is on, water, electricity, anything that, for you to be able to move in the moment you go to the closing table, and you get the keys. Now make sure, now here a lot of buyers are actually not doing this, make sure 1 or 2 days before the closing, make sure you talk to your realtor and get the utilities companies that the seller is paying, make sure you transfer all the utilities under your name. If you don't transfer the utilities under your name, you might get the keys from the property at the closing table, and once you go there, the seller cut all the utilities. We had that happening too, believe me, and it was so bad. During the winter, they cut the heat, they cut the hot water, they cut everything because the seller is gonna stop all utilities if they know the closing is Wednesday, January 15 at 12 p.m. They call the utility companies and they stop paying for anything that home needs. So you as a buyer, we recommend 2 days before the final walkthrough, make sure you transfer all the utilities under your name. You have to call the electricity company, the water company, gas, anything that this property needs, you need to put them under your name 2 days before the closing so you don't have any surprises. Now let's go to step 11. So number 11 is the closing. Woohoo! We did it! Such an amazing process. We finally got to the closing table, which is the most important for those of you that are buying your first property. Make sure you have 2 forms of identification with you. Either you have a green card, or if you have an ID, driver license, or a US passport, make sure you have 2 forms of identification with you when you go to the attorney's office to close the deal. Also, make sure you have all the money in your account that needs to be at the closing table. For example, the attorney's office, usually 3 days before the closing, is gonna send you a master statement where it's gonna give you a detail on everything that you as a buyer need to bring to the closing table. It's gonna have all the credits and debits, seller and buyer, and you're gonna know exactly how much money you need to send to the attorney's office before the closing. Like usually that has to happen 1 or 2 days before the closing, so the money are in the attorney's office. Now, congratulations, you just bought your first home. I hope this video was helpful for those of you that are trying to buy your first property. Believe me, it's always better to buy a property and pay your own mortgage than to rent one and pay somebody else's mortgage. Prices are only going up. 10 years from now, you're gonna have a profit and you're gonna be in your home. You can do whatever you want. You can do as many upgrades. You don't have to ask for permission from anybody. Now, if you are trying to buy a property in Atlanta, anywhere in Atlanta, and you need my help, make sure you contact us, send us a message or call us so we can help you purchase a beautiful property for you here in Atlanta. This is Livia Bica with Keller Williams North Atlanta. Until next time, I hope to see you around town.